And Guy, can options data help traders time the market, or does it just provide smart money sentiment and trend direction?
Bit of both. As I mentioned earlier, we translated OVI into a market-based longer-term signal, and there's something to be said for that, because the shorter term you go, let's just say you're dealing with daily end-of-day charts, the shorter time frame you go with, the more signals you're going to get, the more noise you're going to get. So a cleaner signal is going to be a slightly longer term signal. And that's the kind of market timing signal, OVI driven, that we use for our funds, for our quant funds. And it was worked rather well. So to give you an example, last year when we had a 30% crash in the major indices in a period of 6 weeks from February to April 2020, our longer term signal did not kick in, because it's a longer term signal. It's just too fast. It fell too fast. It's kicking in on more secular movements. However, since that time, pre-crash, so let's talk February the 18th to today, our fund has outperformed its benchmark, the S&P, by over 40%. So what that means is that the longer term indicator was right. There was this hiccup in the market. It was short, sharp. It didn't trigger the long-term signal. Now, of course, for discretionary traders, they would like to trade that dip in the market as fast as it was. And so for that, you then need shorter term indicators. But of course, the shorter term the indicator, you are going to get false signals, depending on obviously how you're using that indicator. But in answer to your question, yes. Check number one is the OVI and options transaction data can be used as market timing signals, but its primary use is for individual stocks, so getting alpha from an individual stock position. But the big answer is yes, you can do both. But if you were to tell me what would I rather use it for, one or the other, if I had a choice and I could only choose one, I would be using it for individual stock selection.